Thank you all for tuning in. Now, I can't promise you the outcome that you're gonna get from watching this, but what I can tell you, if you apply what you're about to learn, this will change your financial future. If you're here, it's probably because you're ready for change. And what you're gonna learn in tonight's training will do just that. So if taking back control of your money isn't enough to keep you glued to this screen for the next 90 minutes, I think it's time to reassess your priorities. And tonight, we've got a special guest. My good friend Brian is gonna be doing the training, and here's what you can expect to learn. Number one, you're gonna learn how to take back control of your money. And you're gonna do that by learning how to be the bank. Number two, you're gonna learn how to build wealth through your own debts and expenses. And you can do that without working harder, without working longer, and without taking on any additional risk. And number three, you're gonna learn how to get all the money back for every single car you will ever buy, drive, and own. That's exactly what you're gonna learn in tonight's training, so get ready, get set, let's go.
Take back control.
Tuesday night.
Tuesday?
Welcome everybody to this presentation at the Money Multiplier, how to be your own bank presentation. Now, before we get rolling here, I'm Brian Fouts. I'll go through a little bit about me here in a moment, keep that kind of brief. Now, before we get rolling, I want to ask everybody here a question. And this is a question that many of you have probably heard me ask before, but if you're new, I want you to really think about this question. The question is this. The question is what in life should you control? Now, there's three things that I believe that we all should control or want to control in our life. Now, there's lots of things, but these are kind of the three things that are at the top of my list. Now, if you guys want to kind of guess what those things are, feel free to put them in the chat box or the Q&A box. Three things in life we want to control. Now, the first one is pretty obvious for most people, and that is money. Most people say that, hey, you know what? I want to be able to control money because we think that if we control money, we can control a lot of other things in our life, which, by the way, is true. But if you're not controlling your money, almost certainly somebody else is controlling your money for you. And if that's happening, by the way, if you're giving control away to somebody else, most likely they're making money off of your money. But that's the first thing we want to control, because if we control that, we can actually control building wealth. Now, the second thing that we want to control, which is my main thing, by the way, in my own life that I want to control, is time. Because money comes and goes, but time, once it's gone, it does not come back. It is that most valuable asset that I believe that we all have that we should want to control. Now, in order to control time, what should you control first, right? We want to control our money first, because controlling money allows us to control time. And for me, by the way, that's a big switch that I made in my life, is that I love to have experiences in life. I want to control my time. That's my biggest thing. So money is really not that important to me from, my overall life, because I love experiences. Now, of course, money allows me to do that kind of stuff. So I control both of these things. But what do you got to control before time, before money? There's one thing you must control first and foremost, and that is your mindset. What is going on up here in your mind? Because if you don't control that, guaranteed somebody else is controlling your mindset or your subconscious programming for you to get the results they want from you, right? So we want to control our knowledge, our mindset, and what we believe so that we can control time and money. And that's what this presentation is going to be about, is challenging the way that we think about time and money, and also challenging our mindset. So I want to share this quote with you right here. And this quote is by Will Rogers. And this quote is this. It says, "The problem in America is not so much what people don't know, it's what people think they know that just ain't so." And you're going to see how this is really powerful, this quote, as we go through this presentation. But we'll come back to this quote at the end. Now, I want to share with you this. Now, I want you to imagine this. I want you to imagine 118-year-old adults, I call them kids, but adults in a room, and you go around to every single one of these 18-year-old kids and you ask them, hey, where will you be at the age of retirement? Let's say 65 as an example. Well, are they going to say I'm going to be broke and poor and destitute? No, they're not going to say that. They're going to say I'm going to be successful, I'm going to be wealthy, I'm going to be a millionaire, all that kind of stuff, which is awesome. But here's the reality of that. When you fast forward to the age of retirement, of those 100 kids, only 5 of them, 5%, 5 out of 100 will be financially secure at the age of retirement. And that is here in the North America, United States, Canada, one of the wealthiest areas in the entire world, yet only 5 out of 100 are going to be secure at retirement. That's kind of crazy. but that's what we want to be. We want to be one of those 5%. And this concept here we're going to be talking about today can help you achieve that. So we want to be one of those 5. And in reality, to be one of the 5, we have to do something different, because typically, if the results you have in life today are not the results you want, we've got to do something different to get the results we want. And what we're going to be talking about here today is doing something a bit different with our money. All right. And yeah, Victor says yes. Okay, there we go. Love that. All right. Now, a quick, blurb about me. I don't really want to, focus on me. I want to focus on you, but who am I, right? So why am I here talking to you guys right now? So I did go through life that traditional way. I was taught to go to school, get a good job. That's my degree I got in construction management and business. I got that many, many years ago. I have not done that career for over 10 years now, but I call that the hard way. I was raised lower income, never taught about money, but my family is a good family, never taught about money, how it works. And I was told to follow that traditional path. Many of you have probably done the same thing: go to school, get good grades, try to get a job in corporate America. Exactly what I did. Had the 401k, had all the other stuff associated with it, had that house and growing family and all the other trimmings that came with it, right? I had the debts, I had the student loans, car loans, mortgages, and I felt like I was drowning. Even though I was being told that I had that American dream, oh my gosh, it was stressful. Did not really know where direction I was going, why I was going that way. And I had some kind of epiphanies. I remember my biggest one was that I remember was picking up a financial article or magazine at a doctor's office when I was there for a physical or something like that. And this article was talking about millionaires, and it said that the average millionaire knows their net worth, but the average person does not. And I realized I don't know my net worth. And that's the actual paper that I did it right there. And I realized I had a negative net worth after working 10 years in corporate America, and it kind of blew me away. But I realized that's what I was told to go do, and it made no sense. I was like, what the hell's going on? I can't keep doing this. I'm going to have less net worth down the road. And then kind of a quick side tangent, my grandfather, this is after this happened, my grandfather, who worked his entire life for retirement, was going to live the good life, and he retired, and then he got real sick within 2 years, got leukemia, Parkinson's, and kidney disease and failure. And he never got to live retirement like he thought. And he told me before he passed away, he pulled me aside. Well, he couldn't even stand at this point, and he said one thing to me. He said, "Hey, Brian, live your life now, don't wait." And I kind of took that to heart, and I kind of changed my trajectory of what I did in life. I actually learned about infinite banking during that journey. And I started a business, by the way, that was around this concept. And that business, it just, because anybody can say anything, but it changed my life. I went from having a corporate job to having a business doing multiple 7 figures of revenue every year. And infinite banking, which we're talking about today, was one of the ways that I was able to do this. And it blew me away, completely changed my life. And as I said, I love experiences. I like to spend my time doing things that my family and I love to do. And that's what I did after that. I started traveling, speaking on stages about what I do. And I just love having fun experiences and sharing those with other people, and also sharing this concept. This is actually me at a mastermind many years ago, talking about this concept to very, very high net worth individuals, finding out that most of them love infinite banking. They do this kind of concept. And so I just love teaching this concept. It's really amazing to me how it can work for you. One thing I want you to keep in mind, though, is this. This is not a new concept. It's been around for a long time. We're talking, since the early 1800s. It's been around for a long time. And a lot of successful people and known names or people talk about this. So Robert Kiyosaki, he talks about infinite banking in his book called Second Chance. And I've worked with a lot of his advisors one-on-one personally. And one of his advisors or guys was my mentor for infinite banking. And it kind of really opened my mind up to how these individuals do this. And I love to share with you how they do that. Tony Robbins, in his book, Money Master the Game, talks about infinite banking. And then, of course, the cornerstone of the concept, the book, is Becoming Your Own Banker by R. Nelson Nash. I do recommend, by the way, these 3 books as well. They really open your mind up around how money works. Additionally, one of my friends and mentors, Brent and Chris, so Brent Kessler and Chris Naugle, they have a book called Mapping Out the Millionaire Mystery. You guys may have seen this one. Great book. It's a very quick read, very foundational. And then Chris also has the Private Money Guide, which I do recommend as well. If you guys want to have the bottom 2 books, the Millionaire Mystery and the Private Money Guide on PDF, I do have them on PDF and some other resources. I'll give you a link to, or my email address here in a little bit. And then I'll send those to you if you guys want a copy of those resources and some other things that I do hand out that it's all free. Just gives you some more information on infinite banking. But definitely take a snapshot of this page right here. Grab the top books. You can get them on Amazon. They're great books. I love them. I've read most of them more than once, just because I always glean something new every time. Now, I want you to understand who has used this strategy, infinite banking, through history, because it has been used quite a bit. So Jim Harbaugh, he was at one point one of college's top paid coaches, and he was paid through this strategy by the University of Michigan. It's really cool why they did this. I'll share that if you guys want to ask on a one-on-one call. I'll share with you why they did it, but it's pretty cool. But he was paid through cash value life insurance, which is infinite banking, by the way. Then you guys may remember this individual. Hopefully you guys remember him, because he he might not remember himself, but Joe Biden. But President Biden, he actually has, I believe it is 6 of these kinds of strategies in place. And we have found out that a lot of politicians also use this concept. Gee, I wonder why they do that, but you'll find out here in a little bit. But yeah, he had 6 of them, or has 6. And then Walt Disney. So in history, how has infinite banking been used? So Walt Disney, when he went to start Disneyland, could not get bank financing. They wouldn't give him a loan. This is back in the early 1900s, I think, like the teens, maybe the 30s. And so, but he had infinite banking in place. So he went to his own bank, borrowed from that, and then started Disneyland. So we would not have Disneyland, Disney World as we know it today without this strategy. It's kind of cool. Also, Ray Kroc. So Ray Kroc, pretty cool story if you ever go watch the movie or read the book about him. But when he started to take over McDonald's, he didn't have the financing, and he couldn't get bank financing. So he used his own banking system to fund the growth of McDonald's during the first 8 years to help with cash flow. So it's kind of weird. One of the most recognizable names, McDonald's, it would not exist as we know it today without this strategy. Real quick, Pampered Chef, same thing. Borrowed, started Pampered Chef, that company. Now I think Warren Buffett owns it, worth over $1 billion, pretty crazy. And then lots of wealthy families through history. And I've talked to a lot of families too that have done this, that are billionaires. But JP's, Morgan's, Chase's, Vanderbilt's, all these people do it, but now you can do it as well. But to understand why would you want to do infinite banking, here's a few things you need to understand, I believe, as we go through this presentation, what it will do for you. So first, it creates guaranteed generational wealth. Tax-free, by the way, day one, not year 30, not year 10. It creates that generational wealth day one. All right. It allows your money to grow uninterrupted, compounded for the rest of your life with guarantees. We love compounding, and we love uninterrupted compounding. And you'll see how that works. It's amazing. It takes control. Remember, I said about control at the very beginning, but it takes control away from the big banks, away from corporate America, Wall Street, and it puts that control in your hands. If you want to build wealth faster or have more wealth in your life, control your money. All right. It also protects your money from lawsuits, from bankruptcy, creditors, court orders, even divorce. In most states, that is state specific, by the way. So it does protect your money and privatizes it, which we love. And of course, the big thing that it does for you is it allows you to be the bank for things you may normally use a traditional bank for. Think of things like real estate investing, college, cars, homes, investments, getting rid of bad debt, paying bad debt down while still having all of the benefits listed above. So one thing you got to understand with this is that it does not just 1 or 2 of these things. It does all of these and more, by the way, all at the exact same time while you're building wealth. So that's why infinite banking can be very powerful when it comes to helping you gain back control of your money and build wealth. Let's kind of talk through really quickly the mysteries of money. So these are things to understand as we go through this presentation. So what is the definition of money? It is just a means of exchange. That's all it is. Now, are your dollars worth more today or in the future? Well, think about this for a second. If you go back 20 years and had a dollar bill 20 years ago and you go into a candy store, how much candy could you buy? Probably a small bag of candy. Fast forward to today, $1 in a candy store might get you half of a candy bar if you're lucky, right? So your money is worth more today than it is down the road. So do you want to use it today or down the road? Well, the answer is both. I want to do both, not one or the other, but use my money today and down the road. Also, will taxes go up or down? Well, historically, they're going to go up. They don't go down. They go up. So would you rather pay taxes today when they're lower or pay taxes down the road when they're higher? What do you know about your retirement account? So think of things like a 401k or an IRA. In most of those situations, you put your money in your retirement account today and you cannot use it. You got to wait 20, 30, 40 years down the road to be able to touch that money, and you pay taxes at that point in time. Well, if your money is worth more today than it is in the future, does the 401k allow you to do that? Nope. It lets you use your money down the road, not today. And if taxes are going up or down, what's the 401k do? Well, you're going to pay more taxes down the road, potentially, not today. So I'd rather use my money today, pay taxes today, and then have it grow tax free for the rest of my life. So that's a mindset shift. We're told to do this over here, but we know intuitively that it does not make sense for most people. Not saying that don't do it, but infinite banking does the opposite. Now let's understand how money flows. So I want you to understand like a traditional banking transaction that we're all used to. So I'm going to use the example of buying a car to look at how money flows. All right. And this is just math, by the way. So let's just say that you're going to go buy a new car. Let's just say that car is $25,000. Doesn't matter. It's just $25,000. But let's also say that you have $25,000 of cash in your local bank or credit union. And so what are you going to do? Well, I'm going to go to my bank. I'm going to take the $25,000 out of the bank and go buy the car with cash. No debt. Awesome. But what if something changes? What if the bank says, or Banker Bob, your guy at the bank says, hey, wait a second, Brian, before we take out the $25,000, what if I do something special for you? I'm going to give you 4% on the cash that you leave in the bank, and I'll give you a loan against the cash to go buy the car. So what if Brian, I give you a 6% loan for 60 months to go buy the car, that's the loan, and I give you 4% on your $25,000 of cash that you leave in the bank. And we'll do this for 60 months, 5 years, by the way. On the car loan, your monthly payment is going to be $483. The future value of all those payments added together is basically $29,000. So that's the loan, that's the car. But what about the bank? Okay. Your future value of the money in the bank earning 4% is actually $30,525, which means having a loan at 6% while earning 4% means you made $1,526. Once again, paying 6 and earning 4. Why is that? It's because the car loan is going down in value. The loan is the balance of the loan, but your money earning 4% is going up in value. That's all it is. It's just math. So understanding this transaction might make you think a bit differently about how you use your money. Now we'll get into this in a bit more detail so that it makes more sense. But generally speaking, once again, earning 4, paying 6, you're making money. All right, so what is the money multiplier method? So the first thing we're going to talk about, there's going to be 3 things. The first thing is the machine. What makes infinite banking function? Then we're going to talk about your wealth journey because we're here to build wealth, get rid of bad debt, all that kind of stuff. And the last thing is that legacy, creating that legacy that lasts, today, tomorrow, and then beyond. All right, let's dive into the machine. So what is the machine? So here's what I want you to think about. I want you to imagine a car. Okay, and imagine that the infinite banking concept is the car. What does a car have? Wheels and tires and brakes, radio, maybe, steering wheel, seats, all that kind of stuff. But what does this car, infinite banking, by the way, need to go down the road? It needs an engine, right? It needs an engine. Otherwise, it can't function. So what is the best engine for this car? Well, we want to make sure it's a fit. So the best engine for the infinite banking concept or car is a specially designed, by the way, dividend-paying, permanent, whole life insurance policy from a mutual insurance company. Kind of a mouthful, but that is the best product for this. Now, if you're saying, well, Brian, what about, I keep hearing about IULs and I hear about ULs and all these other products for infinite banking. Why are you saying that dividend paying is the best or these whole life policies are the best? Well, let's go look at history. Guess who is the biggest buyer yesterday and today and in the future is of whole life insurance policies? Well, it's banks, by the way. So big banks, the banks you see on the corner of your local, city, your town, they are the biggest buyer of whole life insurance policies. In fact, they have, we believe trillions, but billions for sure, but trillions of dollars of whole life insurance policies. Now, they're not buying IULs. They're not buying ULs. They are buying whole life insurance policies. So if the biggest buyer of infinite banking is using this as the engine, why would we do something different? Pretty straightforward. Also, politicians, wealthy families that we've all studied and talked to and learned from, they're not doing other products like IULs. They are doing whole life policies because historically they have seen it all. So that's why we use whole life and why we believe it is the best fit. To understand why you want to be your own bank, we've also got to understand how banks function and how they use your money. So let's just look at a traditional bank. And let's just say that traditionally, let's say that bank is going to give you 4% on your money. I know that'd be nice, but let's just say it's a $100,000 deposit at your local bank, 4% right there they're going to give you. That is a liability to the bank, by the way. But they don't just sit on your money. They put that money to work. Maybe they loan it back out for a home loan, which, by the way, comes right back to them through the seller. The bank does not sit on that money. They loan it right back out, maybe on a car loan at 8%. What's the dealer do? Well, the money will flow right back into another bank. What's that bank do? They lend it right back out again, maybe on a home remodel. What's the contractor do? Money flows back into a bank again. What's that bank do? Lend it right back out again, maybe debt consolidation. So the whole thing here is the money is in motion. Money in motion makes money. Banks make money off of your money by putting it out into the environment, by lending that money back out to you and other people. They do this because they're going to make a lot more money off of your money than they're paying you. By the way, it's around 500% more than they're paying you. And if you don't believe me, by the way, Bauer Financial, they used to have this on their website. I think they still do. You can go look it up. But banks make between 400 and 1,300% on the money that you leave there. But they're paying you 4%, which is great. So there you go. All right, so now what we're going to do on this presentation, we're going to go into some examples of how this can work in real life with some real examples. I'm going to keep this sort of high level just to understand the overall concept, not the actual details. So let's look at a pretty typical transaction, which is buying a car. Most of us bought a car. So let's look at how this will work with infinite banking. Now, I want to go under the hood for a second and make sure that we understand how these things work. So over here, you're going to see what's called a tabular detail. This is of an actual policy. You don't need to know all these numbers. But in this example, you're going to see premium deposits. We're going to call these deposits. Why do we call these deposits? Well, this is how you start to fund your bank, your infinite banking policy with deposits. We say deposit because you can use that money after you put it back in. So it's not like you put it into a car insurance and you don't see that money ever again. In this example, you're going to be able to use that money. So in this example, 10,000 is going in. Age. So a big thing that people will ask about is, well, Brian, what if I'm 55? What if I'm 65? What if I'm 35? Can I still do this? Well, age is not as much of a focus with infinite banking as it would be with traditional life insurance. This is more about cash value and building wealth, not about, by the way, death benefit. We do not focus on the death benefit, even though it is there. We do talk about it, by the way, but it's not the main thing we're doing with this. We're focusing on the cash value, which is what you build inside the policy and what you can use. So in this is what's called a tabular detail or an illustration right here. In this one, you'll see this person is putting in $10,000 per year right there. You can see it right there. And they're going to do this for, let's just say, 7 years. After 7 years, if they want, they no longer fund the policy, but you'll see over here, cash value and net cash value columns, these numbers will continue going up over time. Very cool. So let's look at how this policy will help with the transaction of buying a car. So in this example, we're going to put in 10,000 per year. By the way, that number is just a number that I chose for this example. It could be your number is going to be whatever your number is. So this is just for this individual or this example here. So as we fund the policy, you'll see over here, there's cash value that keeps on growing year over year. And you'll hear in a little bit on this presentation how the cash value goes up over time, because what you'll notice is that, wait a second, they have more cash value at year 10 or year 7, by the way, than they put into the entire policy. So these things get very cool over time. But let's just say that you want to buy a car. So you're funding your policy year over year. In year 3, you can see right here, there is a $25,000 amount. That is a loan, by the way. So this person went to their policy, they borrowed from it, which is a guaranteed loan, to buy the car. Now they're going to be a responsible banker and they're going to pay back their policy loan, and they're going to choose how they want to do that, by the way. You can choose how you want to pay back your loan because there is no required payment. It's up to you. You're the one in control. So this person is going to pay it back at $500 per month or $6,000 per year. Okay. So what does this look like mathematically? So in math wise, they put in 70,000, that's their deposits. They also paid back a loan. They paid it back at, say, $30,000, which means they put $100,000 into this strategy. But keep in mind, they also took out $25,000 of cash as well. So in reality, they've only put in $75,000 into this policy, and they have a car. At the end of year 7, there's no loan, they own the car outright. But here's the fun thing. Look at this. They've recaptured 95 cents of every dollar they've put in. 95 cents. But here's where it gets really powerful in years 8 through 12. So let's look at years 8 through 12. In years 8 through 12, as I showed previously, this person puts in 0. So they said, hey, I don't want to put in any more premium, so they don't. So the fun thing, though, is that the cash value still goes up. So once again, they're not putting anything else into this policy, but it keeps on growing. Absolutely. So let's say at year 8, they want to go purchase a car, another car. Maybe their daughter turns 16, which mine is about to do that. So Lord help me. So they go get another car loan. They do the same thing. They pay it back as they want to, $500 per month. So at the end of year 12, they have put in $30,000 into this policy. But here's the fun thing. They also took out $25,000 in cash. So in reality, they've only put in $5,000 into this policy. But if you look at this, between year 7 and years 12, the cash value grew by $16,888. Keep it in mind, they put in no premiums. They did pay back a loan, but it grew by $16,000. Pretty powerful. And if you look at what's going on here on the screen mathematically, what have they put into this policy over the last 12 years? 75,000 years 1 through 7, 5 in years 8 through 12. That's $80,000. But what is the cash value that they can use? It's 87,000 and change, which means they have more wealth than they started with, and they own 2 cars outright and have no debt. That's a very simple strategy there, but very powerful. Now, there's 3 rules when it comes to infinite banking. The first one is pay yourself first. What does that mean? We've been trained to pay other people, bills, the banks, corporate America. We pay them first and ourselves last. With infinite banking, we want to pay ourselves first. The second rule is pay yourself with interest. If you're going to be the bank and borrow from your bank, pay the loan back and pay it back with interest. That's going to help you. And the last thing is recycle and recapture your money. By being the bank, stop paying interest to somebody else, recapture the freed up cash flow, run it through your own banking system, and recycle your money. There we go. Now, if this works with obviously cars, what else does infinite banking work with? Okay, one of the most powerful things that that's in our life that really does a negative thing for us is going to be debt. So debt steals wealth, in my opinion. And so one of the most common things that people use infinite banking for is to recapture debt or pay debts off. So in this example here, this is a chiropractor. Now this chiropractor, obviously higher income earner doctor, has a lot of debt. So this debt, or this 45-year-old doctor has 9 third-party debts, about 478 grand in debt, which is quite a bit, and paying back a lot per year, almost $70,000 per year they're paying back on these debts. So this doctor said, hey, I want to get rid of these debts. It's hurting me. It's crushing me. So what do I want to do? Oh, by the way, take him like 19 or 20 years to pay all this back as scheduled. So this doctor said, I want to get rid of this. He said, let's do a policy. So the policy structure here is this. So his initial annual premium deposit is $25,000. Now I want to pause here for a second, because in this example, people say, well, Brian, that's a lot of money, 25 grand. Or they say it's not a lot of money. Doesn't really matter. This is this person's number. Your number is your number. But the question here to think about is, well, where is this cash flow coming from for him to fund this policy? Well, in this example, this doctor already had money from his income, his practice, going towards 401ks, retirement plan, health savings account, that kind of stuff. Quite a bit going towards those. So he said, hey, I don't really like those things, but I don't know where else to put my money. Now, when this came around, infinite banking, he said, hey, I'm going to divert cash flow from those other buckets, HSA, 401k, and I'm going to put that cash flow into infinite banking instead. Not all of it, but part of it. So his cash flow did not change. Keep that in mind. Year 1, he puts in the $25,000 annual deposit. He has immediately, within 30 days, around $14,000 and change of cash value available. Now, I want you to keep something in mind. That cash value is low. It's probably quite a bit more than that. But once again, I want to be very conservative in this example. So he has access to $14,000 of cash value. What does he do? Well, he goes and he borrows out that money. So he goes to his banking system, borrows the money, guaranteed loan, and he pays off some debts. So he pays off the Discover's, Lowe's, and part of the Nordstrom card. Then his monthly payments went down by $448 and his debt dropped as well. Okay. So, but here's what happened. So that $448 that he now has recaptured, remember, rule number 3, recycle and recapture. He's not going to let that $448 go out the door. He's going to capture it and hold on to it and use it in his banking system. So in year 2, what happens? He does another deposit of $25,000. The cash value goes up in that year by $16,571, because now he's earning dividends, by the way. So dividends come into the cash value every year. So that's why it's going up faster and faster. The payments of $448 that he's paying back to himself, by the way, he's paying himself that money instead of the bank, is $5,374. So he now has total available to borrow $21,000 and change. But that's what he does. He borrows it out, pays off Nordstrom's, Wells Fargo, the private loan, and part of the BMW. Now his monthly payments have dropped by $1,917. His total debts have dropped. Now year 3, the same thing happens. In year 3, he puts in another $25,000. Cash value jumps up by quite a bit this time, by $25,541. The payments back to himself are $23,000 and change. Now he has $48,000 of cash value available to borrow back out and knock out debts. That's exactly what he does. Knocks out BMW, knocks out the Western Marine, knocks out part of the condo. Now his payments have dropped by $3,677 per month. He's now recapturing. Now, before I go to year 4, I want you to understand something going on here. So how much has this gentleman, this chiropractor, put into this policy? Around $75,000 over 3 years. How much has he taken back out though? Right around $55,000. So how much is left in the policy earning him dividends? Now, traditionally, if this was a cash account, you wouldn't have very much in there. You'd have maybe $20,000 in the account earning you whatever the bank's paying you. But with infinite banking, we're actually earning dividends on the full amount, not the amount less the loans. Loans, the way that we build these, do not impact your growth. Pretty awesome. That's uninterrupted compounding, by the way. All right, year 4, 25 goes in, same thing. Cash value goes up by 26,000. Payments back to himself for 44,000 and change. Total cash is 70 grand and change. So what's he do? Pays off the big chunk of the condo and his debts drop. But now his monthly payments don't change though. In year 4, nothing changes as for payments because the condo is an amortized loan. With an amortized loan, when you pay down the principal, the monthly payment does not change. So that's why it didn't change. So year 5, same thing happens. 25 goes in, cash value goes up by 27,000. Payments back to himself is 44,000. Total cash is 71,000. Now he pays off the condo and a big chunk of the house is also paid off. Okay. Now his monthly payments have dropped by 4,556. Pretty awesome. Year 6. Now year 6, something changes. This doctor, by the way, he said, hey man, I'm loving this. This is awesome. I love the direction we're going, but I want to go faster. I want to have more of this going on in my life. So he cannot increase the premiums on his existing policy. It's 25,000, but he can start a second policy. So he said, hey, I want to put in right around, $35,000 a year into these policies. So what does he do? On the first policy, we reduce the premium from 25,000 down to 10. Okay, you can see that right here. Okay, it went down to $10,000. Cash value still goes up. We do a second policy for 25,000. That you see that right here. Cash value of 14,000. So now he's got 2 policies. He just reduced the premium on the first one, which you can do. So now he has 54,000 of cash value in his policies. The payments back to himself equals, he's got cash value up there of 13,000 and 14,000 to borrow back out. The payments back to himself are the 54,000 and change, and the total cash available is the 82,000. Now he wipes out the entire house. Now he's got no more debt payments going out to the credit companies, and he's recaptured all that debt. Now, he does have a policy loan that has a balance on it. So for the rest of year 6 and part of year 7, he takes his cash flow that he freed up, the 5,777, and he pays back his policy loan. So at the end of year 7, he has no bad debt. His cash value in his policy is free and clear. He can leverage it and go do whatever he wants with it. No bad debt. And he's got multiple 6 figures of wealth built inside the policy that he can put to work for him. Completely changed his trajectory. And he did all of this not in 19 years, but he did it in less than 7 years. Pretty awesome. Now, if you're saying, well, Brian, that's a lot of math, a lot of numbers, I get it. So we actually have software called the Vault that maps out everything that I just explained to you. And it will show you monthly what debts to pay off, how much, and what, and where it comes from. So we map all this stuff out for you. We also have an implementation team, by the way, that does this for you. It helps you use these policies because remember how I said infinite banking is like a car, the overall concept, the policy is the engine. But if you've never seen a car before, how are you going to drive the car? It's knowledge. Well, we're going to help you with that. We're going to teach you how to drive the infinite banking car. Let's kind of talk through the next part of it. Now, this is now where we talk about how do we create a legacy? Because what if I don't have any bad debt? What if I don't need a new car? Can I still benefit from being my own banker? Absolutely. That's a big yes, because once you don't need to do those kind of things, once you don't need that kind of stuff, that's where the fun begins. So we'll get into that here. Like, what are some other things you can use infinite banking for today or down the road? Frank says, how much is the vault? So yeah, the vault, by the way, that software, we just built it here about 8 months ago and just launched it here last summer. And it took all of our strategies and our knowledge that we have as users of infinite banking and also, producers of this, and we put it into the vault so that you guys can come in there and manipulate it and use your own numbers. But it's a monthly subscription. So there's about 4 levels. For most people, the first 2 levels are going to be yours that you're going to want to use. So anywhere from $19 a month to like $50 per month, and there's different options there as well. So that's the cost for that right there, Frank. But yeah, definitely go check it out. byobvault.com. You can check that out. And then on if you guys schedule a call with me, which you'll have an option to do here in a moment, because that's the only thing we can do on these calls is schedule one with me if you want. I'll walk you through the vault if you have questions on it or want to see it. But it's pretty cool software. How do we create wealth? Well, there's lots of ways to create wealth after you've got rid of bad debt, because basically when it comes to debt, get rid of bad debt first and then create good debt or put your money to work. So how do you do that? Well, one, you can put it to work in active real estate. So think of like investors doing wholesales, real estate, flippers, buy and holds, rental properties, even commercial. So think of like apartment buildings, mobile homes, things like that. Also doing private funds or investing or private lending on real estate deals is another really, really popular way to use your policies. Business owners use these policies for lines of credit to grow their business. You've got stocks and options traders that use this for doing investing in the markets, which I don't do that, but a lot of other people do. Startups. So people will use these concepts or this banking system to start up different businesses. Even equipment flipping. So buying like a car, buying a forklift and flipping that thing for profit. Lots of different ways to do that. Now, what I want to do now is I want to show you some examples of actually using infinite banking for something like private lending. So what is private lending first off? So private lending is where you take money and you lend it to another investor who's doing like maybe a real estate deal, and you're going to lend it short term, typically, 6 to 12 months in most cases, and you'll lend it out at, 12%, maybe, 12% plus, maybe 2% points as an example. So in this policy example here, this individual was already doing private lending. So they had a lot of cash, they're private lending that money back up. So keep that in mind. Now, what you see on the screen here is what's called a tabular detail, but I don't want you to get lost in the numbers, okay? So a few things I'm going to point out. So you'll see here at the very beginning, this is the amount they're putting in. This is their deposits total year over year. You'll see a large number year one and then 50,000 thereafter. So in this policy, it's a $50,000 annualized premium. Once again, this is their numbers. Your numbers are going to be yours. Just keep that in mind. But why is this $100,000 more in year one? In year one, that this person put in $100,000, what we call a dump in or a lump sum deposit or dump in. And they do that because it really jumps the cash value, what they can borrow out. It makes it very high, very quick. Okay. And then they put in the 50,000 per year. But let's look at this as time progresses, because the longer you have an infinite banking policy, the more and more efficient it becomes. So let's look at year 8. So year 8, the cash value, it went up by $66,722. Okay. Yet, how much did they put in? They only put in, by the way, $48,594. So if they put in 48, but the cash value went up by 66, what's that mean? Well, it means their cash on cash return is right around 37%. So who here wants to have a 37% cash on cash return on your money? Pretty cool, by the way. But once again, that's just the return they got inside the policy. But remember, they're private lending. So what's their overall return, including private lending? Well, if they lend out at 12%, they're making 37%. And let's say their bank charges 5%. That's their infinite banking concept. That means they made a 44% cash on cash return. So they did nothing different other than where their money went first. So the question is this: would you rather make, and this is what this person had to answer, 12%, or would you rather make 44%? Well, they obviously said, hey, I want to make 44%. So now, yes, this is year 8, but keep in mind, this person is private lending these monies for the prior 6 or 7 years. So they're lending all the time. It's just their returns are getting better and better and better every single year. Very powerful. But do you think you can build wealth faster making 44% on your money? Pretty straightforward. So the question here is, like, when it comes to building wealth, building a legacy, like, how do you do that? Well, the same way you eat an elephant, right? It's one bite at a time. And I always want to make the comment, that everybody says, hey, you know what? I want to be like this guy. And when they say that, they're talking about the individual typically that is on the top of the mountain. They're up there, they're doing their thing. Everybody's looking at them saying, I want to be that guy up there. But the challenge is that most people do not take the first step to start climbing the mountain. They're walking around the mountain, the base, but not climbing the mountain, because you got to start climbing if you want to get to the top. That's how that guy got there. He started climbing, and he did that by taking a different direction, going up the mountain instead of around the mountain. So just kind of keep that in mind right there. All right, so the machine, infinite banking, works for debt, it works for expenses, vacations, homes, taxes, everything else. It works for lots of things. Now, we have software. We even have the gain projector, by the way, that if you want to do investing with your policy, we have software that maps out the best way to use the policy for an investment to maximize your profitability and your returns. Because guess what? We had to solve this in our lives and our clients' lives, and now we want you to have the same tools. So we do that through our Vault software, by the way, or we can just do it for you if you want. So here's the next steps. So to grab a time with me, all you got to do is just go to brian.beyourownbanker.com. What infinite banking really is doing for you is it's really getting your money working for you, because a lot of times we work so hard for our money. We trade time for money. We start that business. We slave away in that business to make money, but we never really flip that switch and get our money working for us. So one of the big things infinite banking does is it makes that switch. Now, this is kind of a dorky little cartoon on the screen here, but it always made me laugh because I was the guy at the bottom for way too long, to be honest, by the way, working for the money. Now I prefer to have my money work for me. Yes, I still work for money, trade time, all that kind of stuff, but big focus is on getting that money working for me. So things I want to share with you right now. So one, I want to talk about the death benefit a little bit, the legacy. As far as loans go with these policies, the loans, you control the loans. So you're the one in charge. The policies, they do grow, right? Via dividends. They grow tax-free internally, which is awesome. I don't mind paying taxes. I'm a lot happier paying a lot less though. So this does that. As I said, they're exempt from judgments and liens. So it's a protected asset, which I love to make money, but I like to protect it as well, right? If you're going to make the money, you might as well keep as much of it as you possibly can. You can even create tax-free income in retirement. So lots of ways to use infinite banking. So let's kind of talk through the generational wealth angle of infinite banking and the death benefit. So what you'll see over here, this is a policy. In this example, this is a 42-year-old female putting in $20,000 per year for the first 5 years. And then she chose to drop the premiums down quite a bit in year 6. But what you'll notice is that at year 1, these are all end of year numbers, by the way, so they're end of year. At the end of year 1, she's put in $20,000, but the death benefit is $325,000. Now, God forbid something happens early on in life, but if something were to happen to this individual, her $20,000 in year 1 would turn into $325,000 for her family. Very, very cool, very powerful. Don't want anything to happen, but if something does, that's a pretty good safety net. But look at year 5. Now, 5 years down the road, she's put in $100,000. You can see that right here. Cash value is $99,000, so pretty much what she's put into it. But the death benefit has grown from $325,000 year 1 to $483,000 at year 5. So this is an always increasing death benefit or generational wealth strategy. Cash value goes up along with the death benefit. So that is a big benefit to infinite banking. Policy loans. So a big part of being your bank is to actually take loans from your bank. So these loans are guaranteed, by the way. There is no credit check, nothing like that. You ask and you shall receive. You don't even typically have to talk to a person. You just log in, request it. It shows up 3 days later, 2 days later. The loans are private, by the way, so they do not show up on your credit report. That is a very important thing right there. They're not part of your credit report. They are private loans, which means that you are the one in control. There are no minimum or maximum payments required. You choose when you want to make those payments or if you want to make one. And we will work with you on the best ways to do that, by the way. But if you miss a payment, nothing happens. All right, another question I get quite a bit is, how can I fund my banking policy? Well, there's that premium deposit. You saw that in some of the illustrations, but you can do that monthly, quarterly, you can do it annually. You can change that, by the way. And these premiums are not for your entire life. They go down over time. In fact, I showed you the car example. It goes from $10,000 per year down to 0 at year 8. So it's not for your entire life. Now, the other question I get quite a bit is, well, Brian, how much can I start with? Maybe I want to just kind of take baby steps. I want to start small. What is that? Well, you can start with 10 times your age per month as a minimum. Now, it's not the recommended premium deposit, it's just the starting point. So it's 10 times your age. So if you're 50 years old, 10 times that is 500 per month. If you're 50 years old and you say, Brian, I want to do $100 per month, I'm going to tell you it's not going to work. Can't do $100 per month when you're 50 years old. This doesn't work. But 500, yes, we can start there and go up if we need to. The maximum premium per month depends on the individual. So it's going to depend upon your age, your gross income. That number is dependent upon those things, and I'll work with you on what that number is to see if it makes sense. But you can do anything in between as well. Now, that's the premium. Okay, on top of the premium, and you saw this in some of the examples, and I'll show you some more examples here in just a moment. You can also put in what is called a dump in or large deposit in upfront. And that's an optional thing, by the way. But if you do that dump in, a large amount goes to cash value. So how much goes to cash value? Well, on the premium side, it's going to be anywhere from typically, 60 to 75% goes to the cash value. And if you do a dump in, like a large amount in, like let's say $10,000, $100,000, whatever number makes sense to you, 90% of that will go to the cash value within 30 days. And you can borrow within 30 days. So here's an example of what I'm talking about. In this example, this is a 32-year-old female, just as an example here, annualized premium of $10,000 per year. That's their number. And then you've got a $50,000 lump sum dump in going in right here. Now look at this. So 60 goes in year one. At the end of that year, dividends come in and build cash value and all that kind of stuff. But they have access to right around $55,000 of what they put in. Pretty awesome. But in year two, what happens? In year two, 10,000 goes in. Cash value goes up by 10,600. Cash value, by the way, is what they can borrow back out. So they put in 10, they had more than that in growth in the policy. Very efficient. But let's go look down the road. If you go down the road to, like, let's say you're 11, the premium is going down. They chose to drop the premiums. They only put in 3,000 and change in the 11th year, but the cash value went up by $10,590, only put in 3,000. So you can see how these things become efficient over time. So this is a quote, and I don't know if Warren Buffett ever really said this. I'm actually going to remove this quote because I think it's kind of funny, but he says, if poor people would just do what the rich people do, they wouldn't be poor anymore. I don't really agree with that, because doing what the rich do, they have strategies that the average person cannot do. My response more of this is, if the average person had the knowledge of the wealthy and took action on that knowledge, they wouldn't be average anymore. Like, that's my preferred quote, by the way. I probably should quote myself by saying that, but that's how I look at this. And with infinite banking, it's doing something different. It's doing something the average person does not do, because we are tired of average results. If you want above average results, infinite banking, take action on that knowledge. A couple of questions I get is, Brian, why should I work with you? I've been teaching infinite banking for over 9 years, probably about 10 years now. I'm doing presentations and stuff like that. We here at the BYOB team, the Money School, we have an entire team of over 30 people that works with you to set up infinite banking. So we're not a small, team here. I always say a family. We're not a small family here. We are one of the largest, if not the largest, producer of infinite banking policies in the US. So we have a pretty good track record. Obviously, I personally have over 100 clients right now in underwriting going through this. We do provide you with ongoing support, ongoing services. There's no cost to that, by the way. We don't charge you anything for our own support. If you want to use our vault, our software, of course, that's a separate thing. But yeah, you can reach me whenever you want. Call me up, all the kind of stuff. I've got lots of clients. I think, there's some of my clients are actually on this call, but yeah, you can reach out to me whenever you want, as you use your policy. So that's part of why we do infinite banking. Another question I get quite a bit is an indexed universal life, or a VUL, a variable universal life. Is that infinite banking? So those are different types of insurance policies. Straight answer is no. You can go online and do your own research. You're going to find a lot of information out there on IULs and VULs and all that kind of stuff. Just do your own due diligence and don't listen to the talking heads and people that are trying to bash one thing to sell you something else. Just do your own research. I can help you with that if you want, but once again, don't take my word for it. But IULs are very dangerous, in my opinion, for infinite banking. I have dozens and dozens of horror stories, unfortunately, from people that have done those kinds of policies and had some very expensive lessons. If you want to have a really entertaining lesson, go look up Kyle Busch IULs. He's the NASCAR driver, he lost, I think it was $8.5 million through an IUL, obviously not set up very well. But they do pay very high commissions. Now to do infinite banking like we do it, infinite banking policies, they have a 70% less commission structure than traditional insurance or even IULs. So if you understand what I just said, infinite banking policies do not pay a lot of commission to the agent. So if you could talk to a traditional agent, traditional financial planner, and they say, oh, infinite banking sucks, don't do that, go do this over here. Why are they saying that? Well, they know that it has a massive reduction in commission. So why would they want to do it? It doesn't pay them all that much, and they don't do very many. So there you go. And we only do infinite banking. We don't do IULs or other things. We just do infinite banking. So there you go. And then in life, there are two things that'll happen to us. We are going to live. So we're living right now. Are we better off with or without infinite banking in place? I believe we're better off, right? We also know that we are going to die. So are we better off with or without infinite banking in our lives? I believe we are definitely better off with it in our lives. So that all being said, what are the next steps? Let's hop on a call. Let's see what your challenges are. Let's see if infinite banking is a fit for you. Let's answer all your questions and let's just go through it, because it doesn't cost you anything. It's just some time to have a quick conversation and see if this can help you change your financial trajectory in your life. I'll end this with this quote because I like this quote. It's kind of funny. The problem in America isn't so much what people don't know, it's what they think they know that just isn't so. So when it comes to money, I believe a lot of people really don't understand how it truly works, and that's why we don't control it. So with that, everybody, I want to say thank you for being here. Take care. Have a great rest of your week.